Hello everybody. In this video I'm going to be doing a brewery stock analysis on Procter & Gamble, and I do tons of other brewery stock analysis videos, so be sure to come and check that out on my channel. And I'm actually doing this for all of the companies in the Dow 30, so come check that out if you may be interested. First off, I just wanted to say not many people realize how many different brands are under the Procter & Gamble umbrella. I mean, just here to name a few, you've got Olay, Charmin, Pampers, Tide, Bounty, Gain, Pringles, Dawn. There's so many different ones, Duracell. And that's just to name some of their bigger ones. I think some of their individual brands that just make one product would probably have close to $1 billion market cap for just that one product, and they make hundreds, which is pretty bananas to me. Anyways, actually getting to the stock, I usually like to take a look at their 5-year chart, and Procter & Gamble's was really surprisingly good. They were at about $70 5 years ago, and they're already back up to, or they're at 140 now, so basically doubling in the last 5 years. And I wouldn't really think about this being any kind of fast growth stock. I would just expect it to have a little bit of a dividend and then not really see any price growth or very little. But this, with the stock doubling in the last 5 years, it is somewhat of a growth stock. And looking at their year-to-date chart, you can see in March when the overall market is down, they did go down to $94, which is actually really, really good. And I think that's partially because they make a lot of staple goods and goods that pretty much everybody's going to need no matter what's happening with the economy. And a lot of their goods, especially their toilet paper brands, were actually selling out in March and April. And their revenue actually may have seen a little bit of a spike from that. And now taking a look at their revenue and earnings, anticipated total earnings in 2020 is about triple what it was last year. And I think that's really because consumers were buying a lot more of different products than they normally would. And then year-over-year earnings, you're seeing a slight gain year-over-year, which is really, really grand for an overarching company like this. Next up, I would show what I would consider their biggest competitor, which is Unilever. It's kind of hard to say what their biggest competitor is. You could even say their biggest competitor is someone like Johnson & Johnson, just because there's so many different products out there. Even though they're mainly medical, they do make, Band-Aid brand and so many different things like that. But down to Unilever, in their 5-year chart, they've seen about 50% growth in the last 5 years. They have a slightly better dividend right now, but that's not worth it to me for the growth right now. So Procter & Gamble looking pretty good if you're trying to decide between these two and just trying to get into the industry. Just a couple of things I wanted to note here. Their market cap is at $344 billion, which is pretty crazy. They are in the Dow 30. They're a massive, massive company. They don't just make little niche products. Well, they do, but they have tons and tons of them across most things you can find in the grocery store, other than a lot of food products. And then their dividend yield is 2.22, which is a little bit low, but that's partially because their stock has done really, really well for the last year, and they may end up increasing that dividend soon. And next up, I wanted to just talk about a few points by the Bulls and the Bears by analysts at Morningstar. So I just wanted to start off with a few positive points. The first one is that even though they have tried to increase their sales, they're not doing it at any cost, meaning they're not trying to cut costs on their materials. They're not trying to increase capacity beyond what makes sense. And a big part of what they're doing is trying to boost their sales by emerging in new regions, as well as trying to more efficiently improve their operations. And the second point is we view past efforts to clean up the core business and forego unprofitable sales. So they're not trying to sell their product until it's profitable. If something's not working, they're going to give up on it, which can be really good for a company, especially Procter & Gamble, where they have hundreds, if not thousands, of different products under all of their brands. And then this last point is the best for an investor as well as from a growth standpoint. As evidence of the cost edge, Procter & Gamble increased core earnings at 4 times the level of sales in emerging markets in fiscal year 2014, but this has expanded to 8 times sales during the past several years. And they've been able to do this even though they're headquartered here in Cincinnati, Ohio, and they're founded here in the United States. They're doing a lot of work to increase their revenues in emerging markets, and that means Africa, India, the greater China area, such as Laos, as well as markets that are already a little bit more established for Procter & Gamble, such as Latin America and Europe. And now I'm going to talk about a few of the bearish points, and I have to say none of these are really geared towards long-term. They're all more short-term bearish points, which is a pretty good thing for Procter & Gamble. The first and second points are related to COVID. It's that their beauty segment as well as grooming are both down in sales. but that will be completely reverted within a year or two at most. So that's not really going to affect the company long term, other than revenues being down right now. And that's not just Procter & Gamble being affected from that. Their competitors are being equally affected. It's not just like people are buying less beauty and grooming products that are Procter & Gamble brands. And then the last point is that foreign exchange volatility may hamper Procter & Gamble's profit from time to time, which is absolutely true. As companies become bigger and bigger and more multi-domestic companies, they are completely more vulnerable to foreign exchange volatility, especially with countries like India, where they're growing, where they exploit their currency a lot, but it's still worth it for them to grow in those regions. And then lastly, I just wanted to take a look at the research report overview. Morningstar rating is 2 out of 5 stars, which is kind of surprising, but I think it's just because of the fair value that they gave them of $111. The wide economic moat definitely makes sense with so many different stable products across so many different brands. It's pretty much impossible for Procter & Gamble to be directly competed against, and the uncertainty is low, which is kind of why, like I just mentioned, they're not going to be going away for many decades to come. And then lastly, stewardship standard. I really do not know much about their top management, so I guess I agree with that rating. Come check out my channel for more brewery stock analysis videos if you did enjoy this one. Subscribe for more content, and thank you so much for watching to the very end.